Welcome to EnergyRogue.com, the go-to source for the latest insights and analysis on the energy commodities market. Led by two industry veterans, Bill Shanahan and Brian Pieri, as they host their weekly commodity market recap. With over 55 years of combined experience in the energy sector, Bill and Brian bring a wealth of knowledge and expertise to the table. From trading and hedging to finance and optimization, they have seen it all and are here to break down the latest market trends and share their insights. So sit back, relax, and get ready to dive into the world of energy commodities with Bill and Brian on EnergyRogue.com.
Hey.
Hey, folks, listen, it is lunchtime on Wednesday, and it's time for us to be live. So, what do you need to do? Get your refreshing beverage, sit back, and let's talk a little bit about that oil supply as we talk about what's going on in the world of crude oil. Brian, I'm ready
Yeah, are you ready?
with
Okay.
my refreshing beverage, which just happens to have a little bit of Energy Rogue on it.
I love it. I love it. Bill is trying to replicate the Coca-Cola commercial from way back when that
Oh
had kind of
yeah.
an audio of the bubbles and pouring into glass. So listen, thanks so much for joining us. For those that watched us last week at NAPE, we did have some audio troubles, so apologies for that. Many people reached out and said, love the content, but the audio was just not good. So we're back in the studio. We are back at it, and today we're going to focus around how oil supply trends will predict future prices. Now, we're not financial advisors, read all the disclaimers below, but this is something that we've looked at in the energy industry to predict not where we are, but where we're going as far as prices.
And what most
Because
people think about this? What do most people think about this?
It's a mystery wrapped in a riddle inside an enigma.
At the end of the day, when you look at where oil prices will go, it's typically a balance between supply and demand. And so tracking all the variables on supply, all the variables on demand, as well as what are the stocks or how much oil is in inventory. These are the three things that the markets will absorb. And it's part of the reason when you have geopolitical news about conflicts that may be around oil producing or exporting nations, that there are upside risks to the market. That's one time, but the other side of that is when we receive reports of lagging demand, such as China has been. So oil supply, we're going to hone in on just oil supply today, because oil supply in and of itself, we're only going to cover just a brief portion of it during this live stream, and realize that there's so much more. We are simplifying it just for this session so that we could kind of get a base understanding of oil supply and how that will predict or impact future prices. So the oil market's impact on your business, it has a widespread impact, and it affects nearly every aspect of your business, whether it be trading, purchasing, selling, or moving crude oil. It's also necessary in your business to understand what those price movements will do, because it's no longer optional not to pay attention to the crude oil markets. For any operation that is in the energy business, it is important to look at the price of oil because it impacts your business in so many different ways. So, and we're gonna uncover how tracking oil supply gives you the edge that you need in the marketplace. So, let's see, did we
Would
have
that be a rogue edge?
it would be a rogue edge. So Robert, hey, good to see you and hope you're doing well. So welcome in. It's probably a little chilly down there, even though you are in Texas, it's still pretty broad range and pretty cold out there. So the big picture. why oil supply trends matter. Supply drives volatility. Demand moves a little slower. It is methodical, and the reports that we get on demand are much more infrequent, and we get soft signals over time. Supply is the new variable that it used to be demand moved quick and supply moved slow. Now they've flip-flopped. Demand moves slow and supply moves quick. So it's in relevance to each other. So supply changes will happen significantly and very quickly. Don't you think, Bill?
Yeah, I think demand, the only time you see volatility in demand, if you see very adverse disruptions.
Right.
If there's something that's going on in demand where all of a sudden demand goes away, that's the biggest thing that happens especially in the oil business. You'll see demand go away, and all that's based on mostly economic measures.
Right.
Whereas supply has a lot more to do with being able to actually drill. It's got a regulatory impact on it. It's got an economic impact on it, and it's got, just like we've seen in the last, I guess now almost 2 years, we've seen a consolidation of companies go on. And when you
Yeah.
consolidate, that usually means less rigs. Just about
Right.
almost every time it means less rigs.
Yeah.
And so, so that's the basic difference that we see in most of that. When demand's moving quickly, it's usually because something bad has happened.
Right. Yeah. Such as COVID. COVID was like a case study in a demand shock and a supply shock all at the
Right.
same time. So that was, and there's going to be books on that one, or there probably already is. So if you know of a book on that, drop it in the comments. Would love to read that.
Or if you're writing a book about that, let us know. We'll try to help you.
Factors affecting prices. Oil prices are affected by changes in production levels, the rigs, the inventory, the geopolitical events impacting supply, and there is a supply and price relationship. Rising production usually leads to lower prices, while decreasing production or disruptions lead to price increases. And to take you a little bit inside of our platform, which we will get right here. We actually track separately what declines in the United States look like and what new production in the United States looks like. And this is by month what we are looking at in we're adding 40,000 barrels a day, but you can notice something. This trend is going down. So every month we are adding new supply to the US production, but it is decreasing how much we're adding. And so bear in mind, we produce
So
13.5 million barrels a day. This
I would
is
say this is
adding,
the net increase, right?
yeah, this is adding 50,000 barrels a day relative to 13.5 million barrels. That doesn't mean a lot.
Right.
I
And on
mean,
top of that, the amount we have to produce to get a net positive 50,000 is significant.
and that's part of the reason that on this page, we actually break it into, we do track drilled and uncompletes. This is how much new production from new wells is being brought on each incremental month, which is sitting right here about 680,000 barrels a day right here. That is new production. These are newly drilled wells, and that's how much we are bringing on every single month. So when you think about 13.5 million barrels a day and we're bringing on 680,000, that seems like a lot. However, that's not the end of the story. We also have a decline of about 650,000 or 640,000 barrels a day of base decline. So for anybody that is not familiar with oil and gas wells, when you drill a well, your first month is going to produce the highest level it ever will, unless you mechanically enhance that to extract more or pull more out of the ground. It is going to be the most because the pressure underneath the ground is at its highest point, and then once you're drawing resource out of the ground, it lowers the pressure in the reservoir, which means a little less is delivered in month 2, a little less is delivered in month 3, and so on and so forth. Did I explain that?
Yeah, and in the first 12 to 18 months is your most significant decline.
Right.
And so this is sort of a little bit different, where oil wells are different than gas wells. Gas wells will hang on a little bit longer, but oil wells, you're moving fluid, so that takes a little bit more pressure to keep that fluid flowing. Then you got to mechanically move the fluid, whether it's submersible pumps or pump jack or whatever you want to use to do that. And so everything after the first drill is to keep the flow going, even though you're trying to keep the flow going, you are still declining. And so
Yes.
all that to say this is we're better at it, but it still declines. And the parabolic curve on that is pretty steep for the first 18 months. Now, when you get out about somewhere around 2 to 3 years, it'll flatten off to where your decline's about 7%.
Yes.
So what that does is that in the more you drill and the more new production that comes on, the steeper the decline.
Yes.
Because it's all new production.
Yes.
And so it sort of counteracts working. So what's all said and done is to get 50,000 net barrels, we have to make 650,000 barrels.
Right. It's a lot of economic momentum to get that. And quick shout out to Jason. Hey, thanks for watching. So glad to hear from you. And listen, I'm glad to see that too, because a lot of people talk about NGLs and crude oil. And actually, Jason, if you want to hit us up offline, you can feel free. We actually cover. We're not going to cover it today, but we get in deep on some of the NGLs as well, such as the supply on natural gasoline, butanes, propane, ethane, and so on and so forth. So
Jason may know a thing or two about volatility.
Yes, yes. I think Jason does, and listen, we actually take a look at it, and Jason, if you're watching some of the volatility in the marketplace, this is the commitment of traders. It's not what we're going to talk about today, but we actually track the commitment of traders on the crude oil contracts, and what you can see over the last since January, we have actually dropped. Managed money has dropped significantly on their long portion. So there could be a negative cycle actually happening there. But we actually track multiple basins and multiple areas, and we look at the overarching what is actually happening on U.S. supply. And many people look at this, but you'll notice you got 13.3 to 13.5, and they'll see these moves up and down, and we can see kind of a sideways. And the reason that we can see that sideways is because of the other thing that we monitor here, which is active rigs by basin, and our weekly rig count. So you can see from 2023 onward, we have been on a steady decline. And I would argue to say that where we are right now is at a point where our rigs are producing just enough to offset decline, maybe add just a little bit more. So that's kind of where we are on the rigs. So if you look at the rigs right now and where they are, that's another thing. But we have been ticking down somewhat, and this is by basin. So the latest month that they have published is January. Oh yeah, because we're in February. I was skipping ahead because we're trading March. Okay, so anyhow, back to this. So the supply is going to impact prices. Bill's smiling at me. Why are you smiling at me?
Go ahead. You're always in March.
No, I told my wife once, I said, listen, if I don't know what month we're in, don't blame me because we're accounting for the previous month, we're in the current month, and we're trading the future month. So I said, if I'm outside of a 3-month window, you should really get worried. But if I'm plus or minus a month, don't worry. And here's a little tidbit Robert is sharing. Refracts are going to be in the rig count number, and they're beating old wells by 3. And that's another component that we actually track here, which is in our frac spread. We actually look at the total rigs and the frac spread, and we've been increasing a little bit. So our total rigs have been inching up over time. So that's what we're looking at on the refrac. But on the supply and price relationship, let's step back a little bit. And when I'm stepping back, it's probably good to utilize one of our convenient reports that we send out every single week. Rogue Radar, it is only $89 a month, and you get access to this where we have a red light, green light system for natural gas and crude oil, and we actually can look at the global supply and global demand of crude oil every week, and we look at U.S. exports, U.S. imports, refinery inputs in the United States, production, oil and product stocks. A lot of people just look at the commercial stocks. It's important to look at the oil and product stocks together because that tells you both sides of the refinery. So
Right.
when we're looking at both sides of the refinery, this tells us where we are. Now, in addition to that, we do have this good chart. Let me pull that up where we'll go to crude oil and storage stocks. And we actually track commercial crude right here. The green is the 5-year average, and you can see we've been tracing the 5-year minimums. That's very supportive. SPR has been adding, but then we add up motor gasoline, distillate, jet, all the product sides. So to see where we are, and you can see we are still significantly below the 5-year average. And hey, Richard, good to hear from you.
Hey,
Glad to
Richard.
hear from you this morning. So and great to see you last week at NAPE. For those that didn't see us last week, we did a live stream on NAPE. It had terrible audio. Apologies for that. So hoping that this week has a little better audio.
It was probably all those brainwaves in that room just going so strong that was affecting our audio. I'm pretty sure that was it.
So the big picture, why supply supply matters. If you look at global supply and global demand, we produce and consume roughly 104 million barrels a day. 1 million barrels a day will move markets in a very significant fashion. So if there's supply disruptions of 1 million barrels a day, demand disruptions of 1 million barrels a day, this will impact the market in a big kind of way. So this is, it sounds like a small piece, but if 1.5 million barrels, that will change the market in a big way. For instance, if you look at some of the trading on crude oil over this past month and month and a half since the beginning of 2025, you will see a large tick up on oil. That was based on anticipation of a crackdown of Iran and Russian sanctions, which have been there, but they haven't really been enforced. You
Yeah,
know,
we saw Iran's production increase under sanctions.
yeah, I mean, and the proof's in the pudding. When you're looking at the sanctions on the supply side, this is where people discuss. This is when it's important to look at the narrative that is in the marketplace, but actually what is actually happening. And this is interesting. When you look at OPEC, this is what they are producing right now. That does not look like a lot, but when you look at the supply quotas, it's really from here to here. Now, the supply quotas are on OPEC plus. So there's another variable, but we take a look at OPEC because Saudi Arabia is a big component right there. But you can see about 2 million barrels a day that was taken back offline, but we've kind of been bouncing up and down. So about 1.5 is what we're seeing on an actual curtailment from OPEC right now. But where is Iran? Saudi Arabia. You can see Saudi Arabia, their big contribution. They are doing most of the heavy lifting for OPEC. And you can see that right here that they went from 11 down to, well, just beneath 9, but they've been pretty consistent. So that's another thing. Russia kind of stopped reporting. UAE, this is an interesting one where I could see this returning to market possibly later this year if demand allows on UAE. So now let's look at Venezuela. This also has been increasing under sanctions right here. And
yeah, but they still have infrastructure problems. I think Venezuela is a little bit different
that's why
story.
it's slow. I mean, this looks large, but it really is going from 400,000 barrels a day to 1 million over 3 to 4 years, right?
Right.
And
I'm not so sure they're not tapped out.
Yeah.
On
Now,
infrastructure.
this is the one that people talk about, and part of the reason we had Daniel, if you're over there, Daniel, hey, we had him on, and we talked a lot about Iran and their base supply and demand, and Iran produces and consumes around 1.8 million barrels a day. All of this is going to exports in some way, shape, or form. It is going around sanctions. So that is actually what's important. And Jason, great to hear from you. So you've got to know the butane and ISO futures. Yeah, those have a lot of volatility. As a matter of fact, somebody asked me about the natural gas liquid stack, and I said ethane is going to track natural gas, crude, or natural gas. Natural gasoline, C5 is going to track crude. Propane has got its own contract, but outside of 90 days, doesn't really know. All the volatilities in the butanes, ISO and normal. So, yeah.
So Jason, I put it this way: real men trade the butanes.
We're not going to do that, are we? Are we going to do that? Are we going to do that?
This is my gift.
You got to have a strong constitution to trade the butanes.
Yes, you definitely do. But these are the reasons that when you look at these products and when you look at butane, you should be looking at crude oil as well. You should be looking at natural gas as well. A lot of these are so interconnected that it really matters. So what is the
secret? I think most of the people we talked about used to dirty hedge the butanes at about a 60-40 level, 60 oil, 40 gas. That's sort of how they would do their dirty hedge on the butanes.
60 oil, 40 gas?
Yeah.
Okay, I wasn't sure which product I was getting the 60 foot. So 60% oil, 40% gas.
Right. If you had 10 barrels of butane, you'd hedge 6 barrels of oil and 4 barrels of gas to actually get you a good mix for the hedge. But all that is, I mean, that was a guy who'd been trading for a long time. I'm not sure I'd have the same constitution of Jason to be able to trade on the butanes.
Yeah, and this is what we look at as far as NGLs as a percentage of crude oil. That's an important chart that I look at, and right now we're kind of on the low side. So NGLs theoretically as a percentage of oil should be worth a little bit more. So the secret formula tracking key oil supply trends, production levels, what's happening with OPEC, what's happening with U.S. shale, what's happening with non-OPEC. You know, Guyana has come out of nowhere and added 400,000 to the mix.
Oh yeah.
You know,
Where'd that come from? I'm telling you.
Well, people expected it, but I don't think they expected it to be that strong. So,
I mean, it predicts itself, but you never know till it actually comes online
yeah.
in countries like that, as well as the refinery in Nigeria.
So, looking at production levels, but not only production levels, but also what direction they're going. What direction they're going is because that is actually tells us the velocity of that change. And for instance, right now, that this is my favorite chart. In case you didn't know, this is my favorite chart because this
What's your
tells
favorite
us
chart?
it. This is my favorite chart, Bill, right here. This one.
So
This one I have up
you
right now is my favorite.
your absolute favorite.
That's what we do.
Yeah.
So anyhow, this tells us the velocity of US production is slowing down. And then we look at the velocity of other production around the globe when we're looking at OPEC, when we're looking at US shale, when we're looking at non-OPEC production trends. If oil prices mean something to you or your business, tracking this and tracing that is important. The sources that you could find that, EIA, IEA, and OPEC. All three have resources, lots of resources, and that's part of the reason that we actually created our service to bring in all those resources into one place so that you have access to all of this. And there's a link down below if you want to learn a little bit more. But for people that just need a quick cliff notes of the marketplace, that's why we have a red light, green light system. This comes out once a week. Plus, in addition to that, at the beginning of the week, you get a Monday game plan for oil, natural gas, and heating oil. Those are kind of the three key products that we're looking at as far as a game plan for the week. And for those that are Rogue Edge members, we actually meet with them one-on-one and discuss what's important to them and develop strategies that will help them. So,
What's the goal?
The goal should be to buy wins.
love that movie. So it matches two of my favorite things, which is totally geeking out and baseball. And I'm like, all right, I am all in on this.
And believe me, it leads to wonderful conversations. Pretty much cures insomnia.
So when you're looking at oil supply, tell me the difference between supply and production when we're looking at other countries, Bill.
So production is what actually they can produce and get to market. Supply is what they have available to market. So if you can have supply, let's say you can have production of 10 million barrels, but if you're putting 4 million barrels into storage and it's not going into the market, you're actually only supplying 6 million barrels to the market. That's just a random thought process. So
Right.
when you think about that, you need to know, and the numbers we look at is, I mean, Russia's a good example. They burn more than they actually supply to the world. And so the U.S. does the same thing. We'll have production, but we also have a demand. And so that's why we're always looking at when you got production and demand and then supply that goes out to the world. So it is maybe a nuance difference, but you need to understand when people use terminology exactly what they're talking about. Otherwise, you find yourself a million barrels out of the market.
Yeah. Well, you're chasing it. In other words, on the supply, a lot of that is coming out of inventory, or can be. And if it is, that means that supply uptick is not going to last for too long. That's part of the
Right.
reason that we look at declines, we look at new production, we look at what's happening underneath the surface so that we can
I mean,
identify the trends.
no different than what we did 2 years ago with the SPR. We
Right.
pulled stuff out of the SPR. The goal there was to keep prices down low.
Yes.
That's what happens when you get it. So that is really, when we start talking about that, that's where you need to know that. At some point, you're supposed to replace that SPR. We'll see if it gets done.
They're starting to. Yeah, piece by piece.
Yeah, but as
Let's
much as they take
get,
out what it takes to put it back in there. So,
well,
I
let's
mean, we track that right here. We can look at it on our deal.
yeah, see, they've been adding since the end of 23. So they've been adding a little bit each week. They have tapered off since the beginning of the year, though. That sounds coincidental. Um,
Yeah, imagine that.
I don't think that's coincidental. Okay, so inventories and storage, looking at that is important. Rig counts and drilling, which we just covered, and Robert shared something important as far as the refracts are not new drills. So when we're having these rigs at work, they are expanding existing fields and refracking them, which is going to enhance production, but a new
Yeah.
drill is going to be worth more on a production level.
Well, it
So,
depends. So a refrac, you'd have to consider it like probably at the highest tier 2 rock, whereas a lot of your new drills are tier 1 rock. As we run out of tier 1 rock, refracs could actually bring on more than what the new drill could do that based on that. And refrac, we use this word. What it means is they're going back into the same holes, going under pressure, fracturing the rock again to increase production.
right.
That's what they're doing. That's it, but it requires a rig. And so if that starts showing up in your rig count, it'll actually what it will affect, it will affect the rig efficiency. Is what it'll
Theft
do.
is not a joke, Jim.
Exactly.
Sorry, that was just right there. So it's important to understand production levels, inventory, storage, rig counts, and drilling. And again, this information is out there on a variety of sources. Baker Hughes provides something on a week, and you can download those spreadsheets and spend hours and hours, or you can invest in a system like ours that caps all of this and puts it into interactive downloadable charts so that you can actually run analysis and spend your time, instead of chasing data, chasing the answer of what's important. And what's important is understanding the trajectory of supply, the trajectory of demand, the trajectory of storage. And I was about to fumble on that word trajectory. That's a hard word to say. So
Well, maybe it is for you, but you know, Brian, I think you're doing such a good job of doing all this pronunciation because, you know, when it's all
The
said and
goal, of
done,
course, is to be like you.
not quite. I like that movie too. So we love movies. So listen, if y'all are watching and you like this, yeah, let us know. We'd love to hear from you. So listen, we got and Robert chimed in. Yep, more efficient. So geopolitical factors that is going to impact more exports. Something that is not talked about a lot. Out of 104, let's call it 104. Let's be conservative, and let's call it 104 million barrels a day of crude oil supply. Bill, what percentage or how many million barrels a day exist on water? They are transported on water.
if I remember correctly, as my memory goes, we're talking about 45% of all the crude oil is in a ship somewhere.
I had 40, but it's over 40 million barrels a day,
Well, you
depending
will
on the
count
day.
what goes to you're counting what goes to the Red Sea and the Suez Canal.
I think that's 30 of it.
Yeah, it. This is why the Middle East is so important, and it's why it's also so volatile. It's also why everybody pays attention to it, is because our price jumped significantly with 1 million barrels,
Right.
and yet we're talking about 30% of it is in the places where war zones have been since the beginning of time.
Yes. Yeah. I mean, and that's part of the reason geopolitics does matter, and it's important to track that and trace that. So, all right, we're
And we're
going to
coming up with
move
our own
on.
new word called geofundamentals. We'll talk more about that in another post.
That's yours. You need to trademark that. I like that one a lot. Why ignoring supply trends could be costly. There's financial risks if you're missing critical shifts in these supply trends, such as the slowing supply of US. Many global analysts and organizations are expecting the US to keep producing because from 2022 to 2023, the US grew by 1 million barrels a day, but there's a reason why. And the reason why is because of this chart right here. So there is a delayed effect of when you see rigs and when you see production. And when we were sitting in 2023, we were seeing an amazing growth. That was because we went from less than 400 rigs to close to 800 during that timeline. So in 2023, we were seeing the impact of those rigs. And now we are on the other side of it to where we are looking at the rig decline. And this decline is actually really prevalent. And this is part of the reason the US is slowing down. So financial risks. If you miss that, you're going to have financial risk. Trader pitfalls. If your risk, if the price surges because of some of the geopolitics or some of the supply trends as far as new production, such as something that people don't talk about lately, is not only the curtailed of OPEC plus, but there's probably an additional 500,000 to 800,000 barrels a day that the UAE could bring online in addition to what they're curtailing. Would you agree with that?
Oh, I think when it's all said and done, they've got probably more like another 2 to 3 million barrels they could bring on, but they're wanting to bring on another 500,000 barrels.
Yeah. Yeah.
And on the trader on that too, you also have to be careful not to be caught in short-term trends versus long-term trends.
Right.
If your focus is too short, you're going to get caught up in the volatility and end up ignoring a long-term trend.
Yes. You also should focus on producer challenges, on underproducing and overproducing, such as the wave of consolidation is going to change some of that supply dynamics, right?
Also, if a producer has a lot of good rock, but they don't have enough capital infusion to drill it, it doesn't matter how much good rock they have.
Yeah. And let's see, we're going to try and bring this home. So market missteps. If you miss, you risk overpaying or underselling without understanding that future price direction. Real world. Real
They have new phone systems now that can ring directly to a salesman, or someone presses star and they go to accounting. Basically 95% of my job.
The other 5% I need to pronounce. So OPEC plus decisions, watching what they do this year, they have decided to hold to their existing plan right now because they're waiting to see if demand comes out. The US shale, watching that in 2019, we reached 13 million barrels a day, predicting a price drop. Now, the price drop also happened in 2020, which we all know that's what they term a black swan. That is a unique event, and that unique event, well, gosh, I hope we don't see another unique event like that. Venezuela.
What's interesting, it's always unique events, but they always happen. I've not quite figured out how that works.
Well, it's unique because there's just something different that happens.
Let's just call it out of the ordinary.
Yeah. Venezuela.
Even though it ordinarily happens. Yeah.
Right. Venezuelan sanctions in 2019, that also impacted things, as well as what's unfolding right now is sanctions on Iran, sanctions on Russia, and how that plays out. So
any kind of regime change in any oil producing country has an impact as well.
Yes. So a little bit about us. My name is Brian. and this is my business partner, Bill. We're with Energy Rogue. We have been in the energy business for a long, long, long time, traded energy commodities at
And what
producers, end users, traders, midstream, every side of the business. And I cut off
and,
Bill.
and and what's our motto? And this is for our friends we had dinner with on Thursday night.
We're two dudes setting out with a common goal.
If you go to energyrogue.com, you will, let me go there, energyrogue.com, and quick shout out to TradingView. I like their charts, and I use their charts every day. We have 2 levels of service: Rogue Radar, which is $89 a month, which gives you 2 reports, PDF reports during the week, one Monday morning so that you can set up the week, and Rogue Radar, which comes out Thursday or Friday after the new release of information is out in the marketplace. This is $89 a month, and that also gives you access to our, let me actually pull it up, our beginning of the week video and our end of the week video, where in addition to the Monday game plan, which is going to map out the week, you get a video that kind of recaps what is happening Monday morning. And then once the reports come out, we recap it together throughout. That's usually a much more in-depth conversation where we're talking about the marketplace. But when we're looking at, so you get daily support and resistance levels, videos, reports, and then Rogue Edge are for people that want to dive in a little deeper and actually get their hands on actual information, charts that are happening as far as forward strips, supply, demand, imports, exports, weather, storage, stocks. We have over 150 charts, and some analysts pay $3,000, $5,000 a month to have access to tools like this. We're providing it in a package of $179 a month that gives you access to all those charts, in addition to our private Discord channel, in-week video updates, Q&A with our team of experts, and you can ask your questions and get your strategy. Plus, we recently launched our AI Copilot, which is meant to help guide you on ideas of what the market may do next. So that's what we do. That's what we offer. Go to energyrogue.com or click the link below, and we'd be happy to bring you on board. We have members in 5 different continents and over 30 states in the United States. And did I miss anything there?
I don't think so. I think it's important to note, though, even for those people who are doing $30,000 or $3,000 to $5,000 a month, I think our data is much more flexible and much more usable. And any chart that you can adjust our charts to what you need, and then you can actually capture that chart and put it in your own presentation. And that's all allowable in our service.
Such as if we were just talking about this yesterday with one of our members who's been with us a long time. Alan, if you're listening, thanks so much. So we were talking about power demand for natural gas and how, even though we've grown on renewables, our natural gas consumption is on a solid trend up. What that tells me is, despite the rapid expansion of renewables, we are continuing to grow our power demand faster than we can grow our renewables. So Rogue Radar saves you 30 hours a week, and it's an $89 a month investment. If you want to go find all those spreadsheets, put them in your own spreadsheets, and spend 30 hours a week, game on. If that's your jam, I am so happy for you, because that used to be my jam until I figured out this, that allowed me to spend my time with a little bit more quality. And for those that want to get started and really stay ahead of the market, click the link below and come on over to Rogue Edge or Rogue Radar. But this is our homepage. You can see actual customers and what they're actually saying about the marketplace, and then you can actually see a sample of one of our videos. You get a daily email, a little bit about us. Look at those two guys. Look at those two guys.
Yeah, I know. Look intelligent, don't they?
And then, as an added bonus, we are going to give you an onboarding call where we are going to onboard and talk about your strategy and what might help you on your strategy. So we were just talking about that with somebody yesterday about their strategy, and their strategy was why on earth would I ever question having this? It's $89 a month, and I made 25 grand the
Right.
last couple of months. So
Yeah.
um, I'm not promising that you're going to make 25 grand. I would like for you to.
No. Yeah. More than that even. But the reason you need Energy Rogue
Everybody
is
needs help sometimes, Peter.
Love that movie. So I think that's all we had. We had let's see, Robert, inflation, price of drilling. I
yeah,
really completely agree, Robert, and we've talked about it.
it's getting harder to drill profitable
Yeah.
wells.
And so listen, folks, thanks so
And
much.
if you want to hear about that, Brian and I did a video on Drill Baby Drill
Yes.
and why that is it's not going to it's not going to raise the prices for oil at all.
Just type in the search mode, Energy Rogue Drill Baby Drill. So that is pretty good. Any closing thoughts, Bill?
No, I think we're seeing what's going to happen under this new administration. I'm getting old enough that I'm cynical on all administrations. So, which somebody found out today in one of my texts. And so, but more importantly, you need all the data you can before you trade.
Yeah.
Even if it's for your own trading, if you're trying to help your company make money, if you're trying to look good to your boss, whatever your reason is behind this, we can help you get there. So, subscribe. Oh yeah, subscribe.
Well, listen, folks, thanks so much. Thanks for spending time with us. Do let us know what, respond back. Let us know how we're doing. If there's something you want to hear about, we're going to shift and do a little bit more educational about why things are particularly important. And we covered supply today. And next week, I'm not sure what our topic's going to be yet, but if you have any ideas, drop us a comment below. So thanks so much. That's all I got. You want to sign us off, Bill?
Hey, listen, we're out of here, and listen, just be kind, and stay a little bit warm. But while you're doing it, turn the thermostat up because that burns natural gas. We'll talk about that another day.
All right, folks. Thanks so much, and we'll talk soon.